live analysis, GBPNZD. Alright, thank you for joining us. Now, before we get started, I'd like to invite you guys to one quick link. If you will all just type in to your browser right now forexcommunity.online, you will be redirected to a massive community of over 1,000 plus Forex traders from all around the world. We share our analysis and different points of view on different pairs on a daily basis. So, thank you guys for joining. Let's get started. Now, GBPNZD. This is the 15-minute time frame. We will be trading on an intraday perspective. So we're not swing trading and we're not scalping. We will be holding for up to a day or two, maybe 3 days, or just a few hours. It depends on how long or how volatile the market itself is. So I would like to point out as well, there is a gap on GBPNZD at about 1.758. It is about a 14 or 15 pip gap that has not been filled yet. Not every gap fills, but there's a very high probability of this gap filling in my mind, just because of how this structure is looking at this very moment. So the 15-minute chart really doesn't show any trend. We'll go to the 1 hour chart. We can really see the market's just in a ranging environment. It's in consolidation at the moment. So another thing I would like to point out is the consolidation. Consolidation number 1 and consolidation number 2. Now, very similar. They occurred in the same, basically the same place in time. The session changeover, 8 to 10 hours before session changeover and 8 to 10 hours after session changeover, there will always be, almost always be, on every pair, consolidation. So expect about 20 hours plus of consolidation. Here we can see 23 hours of consolidation. Once again, 23 hours of consolidation. Now, what we can also see is the whipsaw. Consolidation, break to the low to tag the pending orders of the breakout traders, activate any pending orders of breakout traders that were selling here, had their breakout sell stops at around 1.762. They were activated, and then price came back up, and you can see that whipsaw came back up into 1.772 area. That's right above our consolidation area that we had here. That would activate any buy stops that were left in this area, and also hit any, well, the rest of the stop losses of the sell stops that were activated in here. So what we can see here, right here, I believe, is what will happen right here. So we can see that consolidation, and then the breakout to the low, and now prices coming back up. Breakout to the low, and then come and breakout to the high. Now we may not see a breakout to the highs. We may have a triple top here, but let me explain what I'm seeing as well. Let me explain why I think this breakout to the high will occur. Now we have a price level right here that retail traders are obviously going to be looking at. We see it being respected many times. So we can call that like a support or resistance level, whatever retail traders want to call it. We'll play their game for a little bit, and I'll show you why. So this being a new week, all this work here is a new week, a new week's work. This is an old week. So technically this point right here is the exact high of the week. Why is this important? Well, a lot of algorithms, robots, EAs, expert advisors, these automatic trading systems in their software, in their coding, use the highs and the lows of the day or the week or the previous week in their programming, and as well as institutional traders use this information as well to trade off of. So knowing this is the high of the week. We can expect a lot of sellers to have sold, for example, this head and shoulders pattern. This is all a sell trap. This consolidation right here is a seller's trap. Just like this consolidation was a seller's trap. They trapped the sellers and then came up and hit the stop losses. Right here again, they trapped the sellers, they induced the sellers, and look how they create a bunch of patterns. They don't just create patterns that we recognize as, as you guys, as my students, but they recognize retail, they create retail trader patterns that like every retail trader is going to recognize. So for example, the head and shoulders pattern. Isn't it ironic that it's upside down or something? I didn't even do it right. Wow. That's probably the easiest thing you can do. Isn't it ironic that Trader's Way, or excuse me, Trading View gives you these tools? They give you all these tools, all these indicators, but yet still 97% of traders fail to profit in this market. This is exactly why. They don't know the market structure. This head and shoulders pattern was created to induce traders to sell. Once the pattern was created, it was formed, and then, a lot of retail traders were pushed into profit and then placed more sell orders in this area, and now price reversed against them very fast. So what we can see here is the high of the week. Like I was saying, at the high of the week, the sellers will have their stop losses at the high of the week. So let's say there's a clump of stop losses of retail traders in this area. Now remember when I said we were going to play the retail trader game with this support and resistance line? Well, we're not really. We're just going to add that there for looks, because we can see it there. Actually, no, that serves a purpose. We can see that price action line at 1.7761, correct? So this purple beautiful line, so many retail traders will have that graphed out right now, looking for price to go long. And you know what? Price will break out of this price line, this resistance, and it may even become support for a bit. It may even consolidate for a few hours above the pink line, and then in my mind, what I think it'll do is come down. Price will have a volatile spike down to fill this gap, and then this would be the close to the low of the week, I believe, or the low of the previous week, and the low of the week as well. Here's the low of the week. Here is one of the lows of the previous week. I don't believe it is the low of the previous week. This may be the low of the previous week here or here. I'm not going to go back and count, but because it really doesn't matter. Okay, so what we can see is price coming up to that line we have graphed out here at 1.7761. Now this price action, this support, resistance, whatever the retail traders want to call that, I'm sure price will break above there to induce retail traders to buy, and then that's when the price will be dumped against them. And notice how this right here is just a mirror of what happened here. This whipsaw action happens very, very frequently. So now let's try and get the timing correct on this. First of all, let's look for a new day. Or I should say session changeover. Session changeover happens exactly, I think, in about 20 minutes. So I don't think I'm going to keep the camera rolling that long, but we will see. So I do think session changeover may spike to the high. We could see a very volatile candlestick. Something happen at session changeover, but we'll have to see. It may or may not happen. So what I do think will happen is price will continue to consolidate upwards and slowly take out stop losses. For example, it'll come up and then it'll consolidate in this range and it'll spike up, take out a stop loss, spike up, and every spike up it'll take out a stop loss, take out someone's stop loss, and it'll also, test this purple line, that retail traders have as their resistance, So it'll be testing the resistance. It will break the resistance, confirming to the retail traders that it is in fact a buy. And then what will it do? Like we said, that spike downwards. Now, what I'm also considering graphing is the next day. Next day changeover. So, yeah, that is perfect. Alright, so why is that? Why would I graph the next day? Well, because today is Tuesday. Wednesday, we have a lot of news, high impact news events on the NZD, and these will occur at 5 and 6 o'clock. That is approximately an hour after session change over here. So what I'm thinking, oops, this has got to be perfect. Alright, what I'm thinking is, like I said, price will spike up into this range. London session. And then come down. Session changeover. And we may see some consolidation. Consolidation in this range. And then, like I said, right after the session changeover here, the next day, right here, there is the news event at 5 o'clock, 5 and 6:30. So, right around here, there will be a news event. So, I wouldn't be surprised if there is that very volatile spike to the low, which could be a breakout of this consolidation area here. The breakout of this consolidation area would spike to the low, filling the gap and also spiking or stop hunting the low of the previous week. And then I think we could see a possible rise in price. After that, it gets a bit cloudy. After that, it gets, it's a bit harder to analyze because we don't really know. We don't have much else to work off of. But I do think that this is what could happen. Let's look for this, exactly this to happen. That spike to the high here, and as well as some sort of consolidation in this area. A consolidation here, and then London session spike to the highs, and then come down to the lows, and then for that news event we will see after session changeover on Wednesday a spike to the low, possible spike to the low, and then a rise, possible rise to the highs or past the high of the week. So yeah, that's basically the entire analysis that I had for you guys. Hopefully this was helpful. Hopefully we will make lots of pips. But like always, trade at your own risk. I'm no market wizard like some people say. I do have losses as well. I do take losses, but the losses I take are smaller. I keep them much smaller than the wins. So my risk-reward ratio is obviously much higher, and that's how you should be trading. Now let's look at the fundamentals of this trade. Where should you enter? Where should you look to take profit? Your entry, I would say, should be in this area. Place your sell limits anywhere in here. Best possible sell limit area, I would say 1.7765. Yeah, I think that would be appropriate. 1.7765 or 1.77700. So 1.777. And I think we could get away with a a 35 pip stop loss, maximum 35 pips. If you want to go lower, that's up to you. If you want to go higher, that's up to you as well. In between 35, maybe 40, but I think 1.7805 would be an appropriate area for a stop loss. That is approximately 35 pips. And then The take profit will be the gap at 1.7585 for 185 pips. Now, what was that? A 35 pip stop loss for a 185 pip gain. Work that out. What's that? What kind of risk reward is that? That to me looks beautiful. I could frame that on my wall. Looks absolutely stunning. So let's see how this plays out. Hopefully we will see this structure or something similar play out this week, or within the coming hours, I should say. So thank you guys for watching this video, and should be uploaded within the next few hours. So peace out.